In this video, we're going to look through the CTKS price paths, which are drawn at the start of the month inside the service and never change thereafter. One of the things that we'll look at is the US 2-year and also Bitcoin, total crypto market cap, the S&P 500, the Nasdaq, the DOW, and the Russel, looking from last month's price paths to this month's price paths and determining if the market is healthy or if it's not healthy. You'll find content here you will not find anywhere else. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome. And welcome back, CTKS family. I'd like to thank everybody for their very awesome comments in yesterday's video. We have one of the most incredible communities on YouTube. If you're new, please subscribe. You'll love it here. And for everybody that's tuning back in, a very warm welcome as well. We're going to do something really cool in this video. We're going to look forward into the price paths. We're going to determine if they're following the normalized positive, consolidation, or negative price paths. And we can see that gold is really going for it. Junk bonds has been hit. Euro dollar is down. The Aussie dollar is also down. Gold and silver doing really well. Copper under a degree of pressure. Now let's get into those price paths to understand what do we anticipate or expect from the markets going forward. Are the markets showing cracks? Are the markets about to sell off? Or are the markets reasonably healthy and we're just caught in a normal price wave? Or is it something different? If you're interested in seeing institutional grade quality content that you will not find anywhere else on YouTube, please make sure that you subscribe and hit that bell notification icon. Alright, let's get into it. Looking on the daily basis all the way back into 2023, we can see that the major market indices have been doing reasonably okay, with the exception of the Russian market. With a lot of stimulus coming into China, we saw a big surge that was then dumped on. So far, Taiwan's main exchange has been doing really well. Germany is doing well. Japan is suffering just a little bit, and Australia looks like it's in the process of retracing. So far, the major indices are holding up reasonably well, such as the Nasdaq, the S&P 500. The Dow and the Russell have a degree of weakness exhibiting in them, but that's not necessarily a sign to panic. For quite a time, US liquidity was being bled out of the markets, and now we see it coming back in. Also, just bear in mind that Bitcoin has officially broken out, at least on the 1-month basis. So from a perspective like this, we would expect continuation before a reversal. But we must keep our eyes on the charts. What's really important to us right now is to understand where the major market indices are going. You can see that blue line, that's Bitcoin. If the major market indices come down over time, we expect Bitcoin to also come down over time. If the major markets rally, we expect the opposite. So what are we seeing at the moment inside Bitcoin? There's a degree of weakness. Now this weakness, we have to determine if it's systemic and it will continue or if it could reverse. To do that, we must look at structure. It's very important to look at your cheat sheet, and you can get the cheat sheet free from ctksmethod.org. Inside the service, I do, at the start of the month, 3-dimensional price paths for each of the tiered charts. And when we look back to September and the price charts, we saw that the S&P 500 started really negative, but ended up on the positive closeout price of the positive price path. Therefore, where is it going this month so far? And the thing to just remember, these price paths are done at the start of the month when the indicators are released, and they are not changed. These price paths are also structurally bound, and structurally bound means that we look at CTKS structure, and the easiest way to do that is through the service indicator. It'll just save you hours and hours of marking up your charts with level 1 and level 2 standard certification. At the current time, we can see that the S&P 500 has not done as we would expect it to do. It's been a little bit weaker, but it is on the positive normalized price path. That is a positive thing. These paths, formed in accordance with Level 2 standard certification, give you a bit of a guidance on where things could go if they go positive, if they go neutral, or if they go negative. And when we look at the September CTKS price paths on the Nasdaq, we can see that we pretty much closed out on the end of month close. But what is happening this month? Has the Nasdaq gone positive or gone negative, or how strong is it, or how weak is it? We can see the Nasdaq just popping on that normalized CTKS price path formed in accordance with Level 2 standard certification is doing pretty well. It's predicting the ups and down movements of the Nasdaq. Remember, this is a structurally bound indicator that you can do yourself. So we can see that the S&P 500 and the Nasdaq are showing signs of strength. One of the things that we've seen this month is that DXY has been going absolutely and utterly nuts. It's really increasing. Understanding structural resistance and structural support is so incredibly important, and when we look at the Dow Jones Industrial Average, going back to September, we saw the closeout on the normalized positive price path. Even though the month started really negatively, it turned around and then normalized. What about this month? What we're seeing for the Dow Jones is that it's pretty much just following that normalized positive price path at the current time. So things are reasonably positive inside markets. Please remember, these paths are drawn at the start of the month and then not altered. The Russel 2000 is an incredibly important index and one that we need to keep our eye on. When we look back to September and the CTKS Level 2 standard certification price paths, we can see that unlike the S&P 500, the Dow and the Nasdaq, the Russel didn't rally. It was flatlined, closing out at the normalized consolidation path. What about for this month? We've seen a bit of action and the Russel has come down to its normalized positive price path. A lot of people would have thought it could never go up here if it's just down there at the start of the month when these lines are drawn. But this is the power of CTKS method structure. CTKS structure is the most incredible thing you'll ever come across. There are many videos inside the service that demonstrate these price paths at the start of the month and also towards the end of the month. It gives you an incredible, insanely good idea as to where price is going within a normalized boundary. So what do we see from this? We can see that there's positive momentum inside the major indices and just a bit of a kick back at the current time. Now, how is this going to impact Bitcoin and the crypto market? Because crypto is a very good risk-on or risk-off indicator inside the market. Now, what does this show us? Right now, over the past 24 hours and just a little bit back, we've seen that Bitcoin and the entire crypto market has been coming down. Now, what are these particular areas? That's where liquidations are likely to occur from the long side and the short side. You can see that we don't have much uptake on the short side liquidations. They are reasonably close, but we could retrace to around this level in Bitcoin's price. If we come up a lot further, these are longer dated liquidations and they may take us back to around here. The majority of liquidations from the long side are sitting just around this 66,300 mark. Just to give you a bit of a positional orientation, that would take us back to this spike. We talked about this spike in yesterday's video. Fortunately, the long liquidations have moved up. They used to be lower. They've actually moved up. Please let me know in the comments, do you expect us to come down and tap this area or go up after that, or do you expect something like this? or something else entirely. Inside the markets, everything is structurally bound. So when we look at Bitcoin and when we mark up our level 1 and level 2 standard certification, inside level 2 standard certification, we can do the price paths. And when we look back to September, Bitcoin nearly closed out on that positive price path, even though it started pretty negatively. For this month so far, it's following the normalized positive price path. We would have expected a bit of a more of a kick up right now, but we've not seen it. So just be aware there is a degree of weakness creeping into the market, but this is all part and parcel of price moving in a wave. So far, the markets are pointing in an upwards direction, and you can see that inch by inch, life is a cinch, but mile by mile, life is really damn tough. So, if we lower our time frame and just look at a month-to-month basis, and you can do these markups, path markups by quarter or even by year. But month by month is the absolute most effective. Currently, the things to note is the DXY has had extreme strength, as have the yields, the US 2 and the US 10. The VIX has also been pretty damn spiky this month. But despite all of that, we've seen positive price momentum in the major indices and also inside crypto. Looking at total crypto market cap, applying those projection paths, we can see that last month we followed a reasonably positive price path, and this month we're also doing the same. So when you think about it, the major market indices are all heading upwards. Total crypto market cap and Bitcoin are also heading upwards. Things are looking reasonably positive inside the markets. Always understand that you can get up and down price action, and typically when it comes down, everybody sells. When it goes up, everybody buys. Another pretty good thing to look at is MicroStrategy. When we go back and look at the three-dimensional price path from September, we can see MicroStrategy came up literally 33% and closed out just slightly above the positive normalized price path. This month, we've seen a lot of positive momentum inside MicroStrategy. That is also really, really good. So far this month, MicroStrategy is up literally over 28%. This month, the US 2-year and the US 10-year have been going absolutely nuts. The US 2-year is currently up literally over 11%. Last month, it came down around 8%. So what we're looking at here, when the yields come down, that's typically very good for the stock market and crypto. The yields coming up is typically throwing headwinds into the stock market and also, of course, into crypto. Even though we had that huge surge in the US 2-year yield, you can see that it's joined its normalized positive price path. Why? Structure. I'd like to thank everybody for their awesome comments in yesterday's video. We talked a little bit about structure. Now we're looking at it from a path perspective. The paths gives us a really good insight into where things could go. Don't forget that the paths are drawn at the start of the month. So even though something like this was happening, the normalized positive price path just tells us that it can explode up and then decay backwards, and we see this all the time. So we don't get too excited. You can see that the price paths drawn inside the service at the start of the month do a pretty reasonable job of predicting where price can go from an upwards perspective and a consolidation perspective, not to mention a downward perspective. Often it's very important to know when we're leaving a downward perspective and gathering strength. If it's going positive and then it goes negative, that has repercussions, especially inside junk bonds. Junk bonds is something that you need to get more familiar with. The way I look at it is simply like an inverted VIX. If junk bonds is coming down, the VIX is typically going up. Or if the VIX is coming down with junk bonds, it means that the DXY and the US 2 and the US 10 and potentially oil are coming up. You can think of junk bonds as just the demand of institutions for high-risk debt. It's very, very sensitive to economic conditions. Now, what we're looking at here is a little bit of weakness inside junk bonds, but nothing too serious at the current time. One of the things that you will note, if you have the structural indicator, I don't put the structural indicator on in these particular charts because that's not the focus. I just want to show you where price can go. But above this area on junk bonds is incredible overhead structural resistance. That's going to mean if it doesn't come through it, and it didn't last month, it's going to have to come down and just gather strength to push through it. It would definitely be better if junk bonds was on the normalized positive price path, but it's not at the current time. Please keep your eye on junk bonds. I'll certainly be doing it for you. In conclusion, what I see is a very robust market, with the exception of junk bonds, which is just coming back to a sort of a kind of a retail structural level if you don't know structure. If you do know structure, you know that the actual true support is down here. It's not where it is right at this current time. So you can just think that things are generally positive inside the markets unless we see particular signs of warning. We're not seeing great signs of warning yet. We would prefer that this didn't happen and that it just went up, but hey, this is the markets. Just to leave you with a bit of a bonus, when you look at row 4 inside the cheat sheet, Tesla is a really good indicator of an association between Bitcoin and the main stock market. You can see that Tesla sold down and Bitcoin kind of went with it. It doesn't mean that Tesla's price movements are causing Bitcoin to move. Some people think this is actually the case. It's not. Correlation does not mean causation, but what we're actually seeing here at the current time, there's the potential for Tesla to start rallying up. Now, if it does this, it's going to definitely signal risk-on behavior, and that's going to be good for the crypto market. So there's a few things to just keep your eye on.